Here we go. Yeah, once again, guys, thank you very much for joining us. We've also got Sarah Batelli, who's going to be speaking after me. She's a fantastic architect and designer. But in the meantime, let's go ahead and get started on the presentation here. So the idea is, as I mentioned, to give you guys a sense of what's going on in the real estate market, mostly the city real estate market, focusing on trends, predictions, and a little bit of bonchinche en la calle, things that we've heard and are not sure about that could have a tremendous impact on the real estate market, one of which actually happened last night, so the timing is pretty interesting. But first of all, what I did in this presentation is broke down the markets into three different markets, which is under 120,000, between 120 and 600,000, and then the luxury sector, which you see is quite small because it's actually a very small portion of the market in this picture. So this first graph talks about market movement. As you can see here, the trend is, what these numbers are on your left-hand side is the running average. So basically, as of, this last number is March right here, as of March 2017, there were approximately 13,000 sales the 12 prior months. So this line represents market movement, okay? This line represents actual number of sales in that month. So for example, in January 2017, there were 1,200 sales across the three sectors. Now, when I talk about sales in this presentation, I'm talking specifically about pre-construction sales, okay? The way we get this information is basically monitoring developers' price lists and seeing, okay, well, this guy's got a price list in April of 50 apartments, and then in May, he's only got 48. So we're assuming that those two units were sold, and we're attributing the asking price to the sales value. So that's kind of a bit of a disclaimer, but yeah, all right, let's see. Let's go to the next slide here. Whoops. Sorry. Okay, so what's going on? In the last few years, specifically, you can see right here, September 2013 is when la ley de interés preferencial subió, 120,000, okay, the preferential interest. In September 2013, Varela moved it up to, was it Varela or Martinelli? 2013. Anyway, the Martinelli moved it up to 120,000. Well, you can see, okay, well, supply went down initially, but then it jumped up because it usually takes about a year to get a project approved from, you know, you get permits all the way up to approval. So once they had these approvals and they started selling, you can see a huge jump in supply on properties for sale below 120,000. Now, the same thing you're seeing is trending up for above 120,000, and the peak right here was about 6,000 units for sale at any one time in the market, September 2016. So, all right, this is a pretty interesting slide specifically relating to the figures that I put out here. So, one thing that really surprised us is you look at the variation between March 2016, or excuse me, yeah, March 2016 to March 2017. For example, from 0 to 50,000, there were 215 sales in 2016, 205 sales in that same month in 2017. So
this is just pre-construction.
This is only pre-construction. Yep. So a decrease of 5%. But look about 50 to 80,000, 61%. So what I thought was quite interesting about these numbers are that you've got a 47% increase in luxury sales. The luxury market is actually coming back, and I'm going to get into that a little bit later in the presentation, but from 27 to 54 units in measured between March and March. Now look at over here. 16% increase between the first trimester of 2016 and the first trimester of 2017. What's that tell us? What you guys probably already know, but maybe the people listening on Facebook and that might watch this video on YouTube, is that The middle income market is still very strong, and that's from, and lower income as well, from 50,000 up to about 120,000. It's still very strong. Supply and demand are about a year and a half difference. In other words, you've got, well, I'm going to talk about that in the next slide, but the important thing here is luxury is coming back, middle income is still strong. Overall, though, the market is actually a little bit slower, about 9% slower in total sales on the above 120,000 and in the city, total 2%, so not much change.
Ken, are you including Chorrera and Arraiján?
Absolutely. Yep, absolutely. Okay, so here's a little snapshot of the luxury market, okay? We've got 12-month sales from the top developers in the luxury market. I don't know if you guys can see that back there, but for example, Empresas Bern, this is for a year, right? $108 million in sales, okay? Yeah, Habitats. Well, because they've got quite a lot of new Hyde Park, U Tower, etc. And again, guys, some of these numbers are not exact. We just have to believe what the developers tell us, which we all know in Panama is not always exactly the case, okay? However, that said, for example, looking at Le Marc, okay, that's a very high-end project, $3.8 million in sales, 2017 in March. That's like 3 apartments, okay? And basically, we don't even know if those are sold. They just disappeared off the price list. They might have gotten reserved, and you'll also see some negative numbers down here like Casa Bonita. Okay, that means that no apartments got sold and actually one appeared back on the market. So this being Panama, we have very limited information. So my company has to do whatever we can to get at least tracking trends that we can see are somewhat transparent, which is developer price list, right? So this is a list of all the new developments going on in Avenida Balboa, Bella Vista, well, basically Bella Vista, right? O Barrio, El Cangrejo, and Avenida Balboa. There are, I believe, I want to say about 22 current projects. Now, for example, look at the price per square meter, which I don't know if you can see in the back, but Horizon Tower, Avenida Balboa, 3,400 por metro. Very, very high. However, it's very small apartments, right? So you're buying a 60-meter apartment for 180,000. It's still a 1-bedroom apartment on Balboa Avenue, for example. Then you've got the lower end of the spectrum, which, for example, might be Infinity Tower by the group. They haven't even started construction yet, right? So it represents a bit more of a risk, so you have to give a lower price per square meter. The average price per square meter of all of these projects is right around 2,400, okay? So we're going to talk about where those numbers come from and why in a second. But on average, Bella Vista, pre-construcción, you're looking at about 2,400 a square meter for new projects, okay? So what's going on? Why are prices going up, right? Because they are. One of the main reasons prices are going up is because it's costing more for a developer to build his project. Now, as you guys probably already know, back a while ago, if you built an apartment, you didn't have, well, specifically 80 meters from now on. You have to include 2 parking spaces. Before, you did not. So that zoning has changed, meaning that you don't have as many apartments to sell because you have to include more parking spaces, right? Now, what the developers don't tell you is that they don't have to give you 2 parking spaces. They just have to include those 2 parking spaces in their plans. They can sell you that second parking space, but if you get a good real estate agent, they'll negotiate that for you, right? So also new structural codes. You've got things like you've got to put staircases on the 2 independent staircases now. That's very expensive, right? So what developers have been trying to do is pass those costs on. They say, hey, you know, it costs me more money, so I'm going to increase my price. What you guys saw in the previous graph and what I'm going to talk about in the rest of the presentation is the market is not absorbing that anymore. The market is saying, whoa, whoa, whoa. Okay, 250,000? Sure, I would consider that, but I need my price per square meter to be lower. Okay? So what I'm saying is we've reached a point where developers are not able to push on their higher costs anymore. So they're going to start either having to change their designs or taking less profit. Also, as you guys all know here in Panama, labor costs are starting to increase, and land with good zoning is not cheap. RM3C2 zoning is not cheap. However, what we're seeing now, talking to some developers, is that banks are actually, when they give the interino financing to the developer, they're going back on old avaluos. For example, we had this happen to a developer in Bellavista where they were told that their land a year ago, when they first started talking to the bank, was worth $2,000 a meter. Now the bank actually got another appraisal and said it's only worth like $1,600 a meter, which is causing a little bit of chaos in the development world right now because land prices are actually coming down in the city, or at least according to banks they are. Excuse me. All right. So design trends. Obviously, Sarah is our expert, and she'll be talking about things like design trends and architectural considerations for the real estate market. But 2 points I wanted to bring up in terms of the real estate market right now. First of all, smaller floor plans. As I mentioned, Horizon Tower, we're seeing a lot of new, smaller apartments, which is interesting for an investor because you've got a 60-meter apartment or you've got an 80-meter apartment. If you paid significantly less for the 60-meter apartment, let's say $20,000 less at $3,000 a meter, you might still be able to get a little closer to what you would have been able to rent an 80-meter apartment for, right? Because it's still a one-bedroom. Now, of course, you have more space, so you'll be able to get a little bit more. But my point is, developers are realizing that floor plans can be more efficient. That's the trend in Europe, that's the trend in Asia, and we're seeing it starting to happen here with new developments. Even higher end developments, not middle income. Also materials and design innovation, developers are getting educated on the newest materials like UV coatings or efficiencies that you can add to the building materials structurally and within the different systems. What's going on with the rental market? Well, what I can tell you is this. What's hot right now, as you guys all probably know, is rentals between $800 a month and about $1,200 a month. That's what a lot of people are looking for. That's what foreigners that are working in the hotels, that's what mid-level executives are looking for that have sort of a lower, maybe their quincenas like $1,000 a month kind of thing. So they're looking for between $800 and $1,200 a month. And that's what we're seeing that's what's moving right now. When we sell an apartment to our investor for, say, $150,000, he's able to rent it out for, say, $1,000 a month. That gets pretty interesting, okay? Especially when, as an investor, what you care about is how quickly you can rent it out and obviously how high you can get. So what we're finding, again, is the highest return on investments are the apartments ranging from about $120,000 to about maybe up to about $200,000. That's when you're getting the highest cap rate, they call it. And if you're managing your own property, you can get 7-8%. Okay? If you have somebody else managing your property, most of our clients are getting between 4 and 5%. Maybe 5.5% if you buy very, very well. Okay? But the important thing is how quickly you can rent it out. And that's the market right now. Days on market, we're seeing like a week. When we list an apartment for $1,000 a month, it'll rent out in a week. All right, demand trends. So what else are people looking for? Well, there are executives coming in on lower salaries. So we don't have anymore the guys from Procter & Gamble that are, $5,000 a month salaries. No, these guys are $2,000 to $3,000 a month, which means that they're renting a different kind of apartment. They're not taking the Aquamares and Aqualinas as much anymore, right? They're preferring maybe something small in O Barrio or El Cangrejo or Costa del Este if it exists. It's hard to find something small and inexpensive in Costa del Este, but they're out there. Also, a big one, guys, is competition from hotels. So let's say I'm, again, Procter & Gamble. 2 years ago, I used to rent out 10 or 15 apartments for all my incoming executives. Now, it's cheaper for me to just get a hotel. So that means those 10 or 15 apartments are not being rented by one corporate entity anymore. What happens? Well, if you can't rent something out, or at least you have to lower the price to try to get in a smaller market of rentals, then the property values go down for an investor because he sees that, oh, I could only rent this out for $1,200 when last year you were renting it for $1,500. Well, I'll only pay you $200,000. So that's actually driving prices down. Okay, empty hotels affect the residential real estate market directly. So, a little bit about us to give you guys some insight, and it's kind of hard, it's very blurry on the presentation, unfortunately, but a little bit about us. We're averaging about 30,000 visitors a month on our website. Of those, about 50% come from the US. We're starting to see, I know what these numbers look like, but you guys can't see them. This is the Canada flag right there. That number is starting to increase a little bit. Canadians are starting to come back. I'm going to talk to you guys towards the end of the conversation about that. But the reason I wanted to include this is we're seeing a lot of Europeans. We're seeing a lot of Europeans. We're still seeing Venezuelans, and we're seeing less Canadians, less Brazilians, because the market for them is very expensive. Colombians, with the strong dollar, it costs more to buy an apartment. They need to put out more pesos than they did, say, 2 years ago, 3 years ago with the exchange rate. Yeah, sorry.
Can you go back to the list again for a second?
Sure.
I want to read the countries.
Yeah, well, I can. I can share this with you guys. So it's United States, Panama, Canada, Venezuela. Yep, UK, Russia. Russia is we had 2,600 people from Russia checking out our website. Yeah, Colombia is below Russia.
India, Germany, and Spain.
Exactly. Yep. So those are thank you, Carlos. That's sort of a snapshot of our website, at least. But yeah, 30,000 people a month, and those are unique visitors, not just, ¿cómo se dice? Not just hits. So my proposal is, our biggest challenge right now is tourism. And it affects not just hotel owners, it affects, for example, the owner of Conway, right? His business is probably 30% tourists, maybe 40% tourists. So if he's doing well, he might buy his new daughter, or maybe his daughter just got married, right? His cuñada, ¿cómo se dice? Daughter-in-law? Su cuñado, a new house if he's got money. Right now he doesn't have money. El yerno. He might buy his yerno a new house. 2 years ago, jamás, because he's agotado, he's in trouble with his business. However, if tourism starts to come back, we get hotel rates fill up, right? And that means that you'll be able to rent your apartment a little bit easier, so the investment market picks up. That means that Panamanians start making money, so now they can think about selling. Maybe you've got a Panamanian that lives in Paitilla that's considering moving to Costa del Este, but their business is doing horribly, right? Well, if their business starts picking up, and a lot has to do with tourism, if their business starts picking up, they will buy an apartment in Costa del Este and sell their apartment in Paitilla. That's 2 transactions. And don't forget that you've got a buyer for their apartment in Paitilla and a seller for their apartment in Costa del Este. So that's 4 people in 2 transactions. So it will have a big difference, I would argue. So risk, rumors, and game changers. Here are what I believe are 3 big things to watch out for that could affect the market either up or down. Right now, the dollar is very strong. Okay, that means that for Europeans, for Canadians, for most Latinos, Panama is much more expensive because the exchange rate for them is, they don't get as many dollars when they come here. If that starts to come down a little bit, the Canadians will come back. The Brazilians will come back. The Colombians will come back. And that's tourism, and that's residential and commercial real estate. And hopefully some business for DenFab, Also, mainland China and Asian investment. Guys, last night, I wasn't expecting this to happen, but I cannot be more excited about it. Last night, Panama broke up with their novia Taiwan y ahora está andando con China. Serio. Metido, connected, right? Official diplomatic relations. Sorry. And now let's watch a movie. No, casi. Well, it was really the last slide anyway. So that's a big deal for Panama. Why? Because Chinese will start to come to Panama because they'll feel comfortable, okay? Yesterday, if something bad happened to a Chinese person when they were doing business, maybe they bought a house, of course they're going to have a good attorney, but they're not going to be able to call their ambassador. And the ambassador calls the president and gets things fixed. You know, that's how things happen in the world.
Well, one thing is, if they lift the restriction to come into Panama, that
Sure.
also makes it easier. Because right now, if they don't have a U.S. visa, even if they have a U.S. visa, they can only stay for 30 days.
Right.
So if they lift that restriction,
Ooh.
it's just easier to bring a lot more people.
Exactly. Like a lot more people, volume. But I would argue that even now, we're going to get some institutional investors, some private family offices, some banks that are going to feel comfortable at least exploring the idea of Panama because they know that they've got diplomatic channels si la cosa se pone mal. No? It's also happening in Korea. Korea just elected a very left wing who likes high taxes and socialist. So that means that a lot of the old families are also starting to look at Panama now. You've already got Samsung, you've got some other big Korean, LG here already, so there's a precedent. But for the most part, Asia doesn't even know about Panama, and that's changing very quickly. And also, as we all know from la ley 130 y toda la habladera en la calle, property taxes, if Blandón, well, the proposal that Blandón put out there, obviously he doesn't have any power. It's the diputados and the ejecutivo that's going to finally determine what happens with the property taxes. But imagine if they cut the property taxes in half, what that will do. That means that somebody was looking at a building, a penthouse in Paitilla for $1 million a year. Right now they're paying $20,000 in taxes if it's not exonerated. They will be paying $10,000. So I would argue that if they do that and interest rates, we'll see what happens with the preferential interest rates, but if they move up la tasa de interés preferencial to 150,000, that will also have a tremendous impact. Okay, thank you. Gracias por no dormir. That's it.
Let's open a big casino.
Yeah.